Morning. Let's see. You. Oh, I gotta get this all set up. No. Your channel. Morning, Nevin. Morning, Chris. Okay. I got FinViz up there. I've got X. Let's see if there's news. Trending news. OPEC remains, yeah. Biggest stock movers today. This is a good article because I sold out of Pfizer. Larry. Okay. That's a good one. Let's go back here. Google named top pick. And I'm getting into that one heavy. By JP Morgan. Solid. Share consolidation. 1 for 10 consolidation to regain compliance with the NASDAQ. Yeah. So it's a reverse split. I mean, Canopy's just going to get a reverse split. So McDonald's hits gold with Chipotle before selling. Could Cosmac blow up? Unicredit. So Palantir. Do I care about this? Let's look at Palantir. Stock hasn't. I mean, it's up 0.74. Stock market didn't, Morning, John. Morning, Joe. Okay, this I do want to address. Tesla recall. Misrepresented. Morning, Mike. Oracle's its earnings were just bad. But like I said yesterday, Larry Ellison's confidence. I'm waiting for it to see if it holds the 100 mark. I like the gap to still be filled up here to 125. I don't think that's crazy. The valuation is there. The PE is 27. The forward PE is only 16. I think that there's a couple of reasons for this, and you can see that channel that FinViz kind of drew, that it's just at the high and it's kind of sitting there, and it hit that high and went down lower to 100, and that's I think the 200-day, if I'm not mistaken. No, I'm sorry, that's the 50, and the tan line is the 200. So and the purple is the 20-day. So they have 20, 50, and thing. But you can see, oh, I got to upgrade to be able to draw. It's in that channel. It's down here. So it's in the bottom half. I'm waiting to see if it holds this 100. You can see that intersection right there, where if you draw it down just on the two lows. Now, it's two lows, not three. If you draw it back, it'll hit three candles. But here is this bottom one. And so this support level right here, I think at 100, I'm waiting to see if it hits that because I don't have confirmation in the algorithm. And if it hits that with the RSI at 20, it's just oversold right now. So, Joe, I think Scott wrote in the Facebook group last night that he bought a bunch of Oracle at 104. I don't think that's a horrible play. I really, really don't. We look at these. They're selling at 113. So I think 113, 116, 118, you're seeing that price up there where people are selling large amounts. Larry Ellison sold at 120. $211 million worth. I think he's saying, hey, I think it's, capped at that. That was way back in June. He didn't know that this quarter was going to be this poor. But when he gets on the phone and says, on the call and says, listen, this is temporary. It's going to be fixed. So I believe it. I think Oracle's still one of the best ones out there. But, it's still expensive in terms of the PE's 27. If we go over here, I think they'll do Oracle in the charts. Let's see. In the news, enterprise software, plunges as analyst, debate bumpy ride in the cloud, Oracle's earnings, Oracle in the charts. Here we go. This is it. So if you're on Seeking Alpha, I'll put this in the, I hope you can read this. But I should change that to my thing. Morning, Brandon. But you can see here's the revenue. The blue is the cloud services. Just kind of, they're saying, hey, maybe we're not growing as fast. You can see the license support, kind of even, nothing crazy. Cloud license, on-premise license revenue. That's where you're seeing kind of, here's the Q4 2023, Q1, and then Q2 24. That's where you're kind of seeing the bump up, where they said, hey, we're going to go down. Q4 2023, we expect it to go down. That's where you're seeing the pullback. Hardware revenue, you can see, again, a pullback. Oracle services revenue, you can see, again, a forecasted pullback. So that's where you're seeing it. Go Chiefs. Brandon and I obviously disagree with the ref's calling of the penalty on Tony, who, by the way, Brandon's from Kansas City, goes to the Chiefs games, big homer. But yeah, you're down at 100. I mean, pre-market, you're up at 101. So I think it's bouncing off that 100 mark. I think it's finding its footing. I just don't want to say, hey, that with the MACD going down on this one, if we look at a long term on Oracle, you'll see it ran so high so fast. This is a weekly. This goes back to the October lows of last year. Even on the pullback in October of this year, you pulled back to about 100. So I think this line right here at 107, that was where I thought the support or resistance was. I forget which one I put that up. I think it's resistance is what I was saying. But I think you're going to build a channel here. And I think that, on the 4 hour, I think you do get to that gap. Remember, the algorithm over 2 years makes you 19% in Oracle. You wind up only making 1% if you buy and hold. And that's 28 positions. So you win 25% of the time. So the algorithm isn't great on this one. I do think that this is a buy and hold, even though you're only making 1.3%. My thing is, hey, this one just got you out of a 9% gain right before the earnings. I said be careful. I thought the earnings were going to be good. Do I think you're out of luck if you bought at 114? No, I think you buy more at 100. I think you dollar cost average your way into this one. So that's where I think we're at with that. Let me see. I was on Going over some news, the trending news. Okay. You need to look at this chart. SCA IM Sensor Unlimited Economist chart of the day. Next chart below really caught my attention and motivate this article. It displays yield spread between SCHD against overall market, iShares IPV in the past 10 years. The yield spread here is calculated as the TTM yield between two funds and not down all over the Google sheet. As seen here, okay, this is the SCHD yield. Yeah. I'm not a big fan of SCHD. SEO, I mean, I said be careful because oil's at 60. SEO's down 0.95. Oil's at 60. I mean, if you go over here, it hit 69. I think it's up at 70 right now. 69.36. Be careful. I don't think it's going down to 50. Wow. Rumble. Rumble got some big buys here. At $5.50. Here at $5.85. The target price is $9.38, but that's all old. They're not making money. I don't know anybody that uses Rumble, so I'm slightly, but God, you got $1.7 million worth. 10% owner bought $800,000. I'm sorry, that's $9 million worth, and $5 million by these two directors. Stonehouse. Wow. But is that... This is the Israeli cybersecurity company. I mean, reverse splits are never good. Never good. I mean, they're doing it to keep their listing. Yeah, Oxy is one of those. I'm debating, and I'll get to it in I sold out of Exxon, and the reason I sold out of Exxon is nothing more than my average price was around 40, and it's lost its confirmation. I sold into weakness. I just don't trust that oil, that their stuff. And the day before I sold out of PXD. Oxy's on my list to maybe sell out of. I think I'm about even, believe it or not, because I was doing it around that $60 mark. But I haven't gotten this low at 55. So the choice is on Oxy. Do I double down and buy on weakness, or hold on, no, dog isn't there. Or do I just jump out with a small loss? So I'm not sure, but let me get to the scanner. Scan. Ooh, we got a bunch. Pan W, VOO, SMCI, Roblox, Netflix got another one. Oh, it's 1 for 20. Yeah, no, it's 20 for 1. It's reverse. Yeah, it's not a good sign on HUBC. It's not something that I want to. Oh, here we go. I've got to. Let me see. I'm gonna clean up my own portfolio real quick. Okay, we're gonna take this out of there. Brokerage holdings. We're gonna take this out of there. Brokerage holdings. We're going to take this out of there because I sold out of that. Brokerage holdings. I sold out of my TQQQ, which unfortunately is significantly higher, but Oh well. Target, Square, Snow, SMCI, Shop, QCLN. I still have some QCLN. I sold out of Pfizer. I never want to see Pfizer again. Oxy, Nvidia, Coke, J&J I sold out of. DraftKings I sold out of, so I'll take that out. Cat I still have. Bank of America I sold out of, so I'll take that out. Brandon, that's not a strategy. Can't say I haven't done it, but it's not a strategy either. Okay. Etsy. Etsy is a cross up from yesterday. Energy names. Nope. Levered ETFs. The only one that I'm... oh, here we go. SPXL, FAS, UPRO. Let me get to low cost Vanguard. Oh, God. VIG, VO, VOT, VTI. I mean, everything's crossing up again, which tells me it's just, I mean, we're in a bull market. And so, I got to put my capital to work. Spider sectors, BRKB, XLF, XLG, which I really like. XLG is the, was it the top 50? Yeah, top 50. Top 50, S&P. Let's see, not owned. There should be a few. Oh. But God, I got to do a lot of freaking charts after this too. Okay, where's my Twitter? I got to put a couple of my own links in there. Okay, did I get the VIX? Yes, I did. Core portfolio update, copy link. Oh, come on. And yeah. Copy link. Okay. Let me go back to the scan, see if this one's done. There we go. Okay, it's still running a little bit. AIQ, that is, I think that's the ETF, yeah. I mean, that's just solid. Penn, JP Morgan, still on a run. Massimo, are you going to get this gap fill? I mean, I don't like doing ones that I don't know too much about, and this one's just a rebound. JEPI, Netflix, we had another buy on. KWeb, this is the China ETF, SMCI. PanW, listen, I'm still in PanW. I still love that stock. Okay, that's the not owned section. Let's go to the Dow. I'll put in AIQ. Why not? Jim Cramer's done talking about Pfizer. Bet if the Pfizer CEO agreed to come on Jim's show, he'd say, oh my God, everybody's got to go out and get their shots. Everybody's got to go do this, do this, do this to support Pfizer. Yeah, he'd do that. Joe's playing the retail game. Joe, if I find a Twitter person that actually does that, I will post it, because undoubtedly there's always some retail trader out there who posts that, and we're all in learning stages, so I don't make fun of them, but you're 100% right. There are people who just don't understand the market and what's going on. Listen, we're all in that situation too. I have no idea why Sedge, is such a poorly run company. I don't know why Target is such a poorly run company. Ooh, look at the Dow stocks that went up. Ooh, Visa, Intel, IBM, Honeywell, JP Morgan. Wow, that's a lot of I mean, if it's not clear that we're in a bull market, holy crap, look at that. NASDAQ 100. I mean, that's 1, 2, 3, 6 out of 30 Dow stocks. CPRT, EA, Ross Stores. I mean, that's just been flying. Cadence. Boy, that, I looked at that one before. ISRG. This is an interesting one because this is in everybody's growth category, and it just crossed the 200-day. And if we look at the weekly on this one, down at 256 was where it crossed. I mean, you're still got 360 in this one to get to the highs. Mondelez. Constellation Energy. Intel, Netflix, Honeywell. I mean, there's just too many. Let's go to the S&P. Let's scan it. Hey, go girl. What's up? ACN. Philip Morris, I won't do that one. From MasterCard. I mean, if you need assurance that we're still going higher, look at all these. Did Palantir? I don't think Palantir got a cross up. No, let's go back to the strategy tester. They haven't gotten a cross up yet, but it is putting in. Like, look, I mean, the MACD's about to cross up. You still don't have confirmation, and that's what worries me, because you've got this gap that's starting to get filled down to 15, and I don't want to say that you shouldn't buy at 17. Yeah, I know. It's all bots. I mean, we got like 5 people in here in bots. Look at Roblox. I mean, Roblox just continues. Yeah, this was from, what, 5 days ago? That you have a 54% gain, and you're up even higher now? So, you're saying baby needs a new roof? Roblox is the big winner on the core portfolio. Okay, I think I've got enough, because I've got a lot to go over, and I'm going to do it quickly because I've got to get going. I am flying tomorrow, flying back to Atlanta, but in the afternoon, so expect a show, but Friday you might get a... Mag 7, I still think, I mean, the Mag 7 is just crazy. You wanted to see crazy? Look at this stock. I mean, I don't have this in any portfolio, in any look that I'm looking at. This is Kava Group. This is a high-end kind of fast casual food, I guess is what it's called. But it's IPO way back here in June 2023. And everybody was like, well, should I buy the IPO? And I said, no. It traded around 39, went all the way up to 56. Ever since then, it's just fallen. And yesterday was the close of the lockup. So people, insiders who got early shares could basically grab it and sell it. And they weren't allowed to sell it before this. So yesterday in the morning, you had a 13% candle. And look at the volume. I mean, what happened was people didn't see people selling. So they started freaking out, and they're like, oh, my God, it's got to be worth more. It's got to be worth more. Well, its price to sales is 8.4. That's 6.48. That's crazy. I mean, it's down 11% year to date. Average target price is 43. You're trading at 38 right now. I don't know that I trust the $43 because they haven't had enough earnings for people to look at. So you can just watch it later or get the newsletter. I mean, here's the thing, Go Girl. In my mind, the way you kind of, I don't have time to listen to 2-3 hours of somebody, and my live show is like an hour and a half sometimes. So my preference would be to just read the newsletter, scan it. I do put I put a lot more work into that newsletter than to have people scan it, but I think people get a lot out of it, and I try and make it as broad as possible for the general folks. For the paid ones on the weekends, I try and whittle that down to 1 point. Sweet. Thanks, Go Girl. I appreciate your support. Okay. I don't see anything here that's shocking. Natural gas is down 0.48 again. I mean, let's see. Let's see if I can I do natural gas? Let's see. UNG Natural Gas Fund. I guess I can't do. Let me see market data. Let's see if I can do bonds, commodities. Here we go. I guess UNG is the best thing that I can do. Here's what you have to look at. I mean, let's do charting. Look at this. I mean, this is the U.S. Natural Gas Fund. Look at how cheap natural gas has gotten against the S&P. God, that's crazy. And natural gas is just getting cheaper. Holding back the market from exploding. Broadcom 20-for-1 stock split. Sweet. Thanks, Scott. Yeah, if you're just listening to me in the background, I know, okay, if she's listening, okay. She just listened to me while at work, and I think Celia does too. Hell no, Go Girl. Hell no. Natural gas is... I mean, here. Let's do boil. And let's do a... This will be interesting. Let's chart it against KOLD. Let's see. Look at the 1 year on KOLD. 672%. Versus Boyle down 96%. That's 1 year. You go 3 years, it's a little bit. I mean, they're in line. Here's the problem. That Boyle ran up so much that it's just kind of catching up. And so I don't think the price of natural gas is going to go up. I think the volatility is gone and the trade might be out of realm. But look at that, over 5 years, BOIL is down 99%. KOLD is down 56%. So I think KOLD still has some or BOIL may have more room to run. But I just, I think you trade these. You don't buy them. And I think right now in a bull market, 5 stocks to watch. Yeah, let's do this. That's a good one to put in the newsletter. I always like these articles. 5 stocks to watch. Pfizer, PFE, ADBE, HTC. What happened with Hertz? I don't even know. Shares of MasterCard and Visa garnered some attention. Marginally lower. Shares of Hertz slipped 2% ahead of market open after Oppenheimer downgraded the stock to perform. Brokers say it was moving to the sidelines on the car rental company due to the view that next year will be a transition one for Hertz. Oppenheimer sees headwinds in 2024, such as significant ongoing challenges to Hertz electric vehicle initiative. They're getting killed by the electric vehicle stuff. I like them for going to electric vehicles, but they're getting killed by it. Okay. Oh, come on. What happened here? Did I freeze? Let's go to the 4-hour. Run. And we'll go to QQQ. I guess I can't see the... Bitcoin's always to get in, good in. I mean, here. BTC, I think, is what it is. Yeah, BTC to USD. Oh, I don't want... There we go. We'll go to charting. I mean, so here's what you have to see. The S&P is up 27%. Bitcoin just came down to meet the S&P. But look at how much higher it could and stretch past the S&P in good times. Remember, this was great times. This was low interest rates. Where are we going? Lower interest rates. So I think the risk on is fine. I don't think that 40,000 is something to blink at, but I think, when you're at 60,000, is 40,000. 40,000 was the time to get in. So, okay. Let's go to my link tree. Okay. Okay. I got more to start out with a lesson with Mike. Mike wrote me a great letter yesterday. I mean, it was perfect. It was perfect. I don't always put into words what the point of the podcast is, but it was perfect. Perfect. I mean, he got the point of the podcast. The reason I started this whole damn thing, the reason I still do it. Okay. I'm going to leave those in there because okay, I'm going to hit record. Good morning. It's Wednesday, December 13th. Got a lot of news to go over, got a lot of charts to go over. One thing that I do want to ask is that if you're listening on Spotify, go up top and just rate 5 stars. Every time I ask for this, I get a bunch of 5-star ratings, but it does help. It helps grow the podcast. If you're learning anything, if you continually listen, there's no reason for you to go up there and just hit 5 stars. On Apple, it's a little harder to find. You have to go into shows, find my show, and then rate it. But there's 3 things that you can really do. Rate me on whatever podcast platform you listen on, whether it's Spotify, Apple, or anything else. The others, I mean, Spotify and Apple make up about 98% of where people listen. That's why I include them in the newsletter. Second thing is go to my Linktree, linktr.ee/dailystockpick, and just subscribe to YouTube. I still need more YouTube subscribers. So just go over there and subscribe to YouTube. If you're already subscribed to YouTube and you've rated me on Spotify, you are grade C listener. Grade A listeners, also sign up for the newsletter at dailystockpick.substack.com, or you can go to the Linktree and sign up. And A-plus listeners, follow me on Twitter as well. So if you want to join the private Facebook group, I think a lot of great discussion goes on in there from time to time when people ask questions. Twitter, I think I post the best content. If you listen to this podcast, I think, and Instagram, I'm on there every now and then. I think messaging me on Instagram is great. My Linktree has all of these links, but again, rate me on the whatever podcast platform you listen on, subscribe on YouTube, subscribe on or follow on Twitter, and sign up for the newsletter. That's how you can be a great supporter of the podcast. One great supporter yesterday, Mike, he wrote me a great letter. He's been a trader for a while, got TrendSpider when he started listening to me. He said it increased his confidence, which is great because, you know, again, as traders, part of the thing is you have to be confident about the trade that you get in. 90% of you that write to me and say, what do you think of this, are looking for confirmation from me. That's probably not a good in the beginning. It's good in the beginning, not good later. But again, TrendSpider takes your emotions out, and I'll show you a look at the QQQ chart that we're looking at right now, how you can identify, a potential move, and then you have to have confidence. So Mike says he's gained confidence with TrendSpider. High five, Mike. Here's the quote that I really liked. I've been trading for a while, but had no set strategy. That's one of my biggest takes away from you and what I'm working on. That's the point of this podcast. I would much rather have you not follow me in my trades, but come up with your own strategy. The reason I try only to put some trades out and tell you what I'm doing, and not particularly price points and things, I don't want people to follow me. I want you to develop your own strategy. We all have different risk tolerances and different ways of doing things. You can use my tools as a strategy. That's why I give away my 4-hour algorithm on TrendSpider. That's why I do the scans and the watch lists and everything, is so that it can help build a strategy for you. If you want to build something on your own, that's where I would rather have you go. If you don't have, and I wrote this note, if you don't have a 50%, if you don't have 50% of a 7-figure portfolio in Apple, then you shouldn't follow my strategy. I mean, simple as that. Develop your own strategy. My strategy got me there, but again, not everybody's going to be comfortable with 50% of their portfolio in Apple with a 7-figure portfolio. That's me. You can't follow people. You have to develop your own. I likened it when I was emailing back and forth with Mike. I likened it to a Major League Baseball pitcher. Some pitchers are relievers because they can throw a 98-mile-an-hour fastball. Some pitchers have a great curveball, so they're starters. Some pitchers can only go 3 or 4 innings, so they're middle relievers. Again, you have to develop your own. So here on QQQ, and it's on TrendSpider, and TrendSpider obviously is available for you to buy, and I give you my setup in the newsletter, and you can get all of the algorithms and watch lists and everything if you sign up for TrendSpider through me. But I wrote this a couple of days ago. The Bollinger Bands are cinching up, and Bollinger Bands are these shaded areas that you see right here. And you can see when the typical thing with Bollinger Bands that I've learned is when they cinch up, the direction of the market is likely to change. And so you can see them cinching up right there. Well, now they're expanding, and they're expanding up. It confirms above the 9-day, and it's on the upper end of the Bollinger Bands. The MACD is still going down as of before. It's crossed up. The RSI was ticking up. So you're never going to see, if you see an absolute perfect setup, take it. That's part of the confidence that Mike was saying. But I don't think I've ever had an absolute 100%, oh my God, this is for sure trade. Whether it be long-term, whether it be short-term, whether it be anything. But when those Bollinger Bands cinched up, and I wrote this in the newsletter, and the MACD was going down, I said that the direction of the market may go down, so I'm careful. But the second we had this on December 7th, confirmation up here, and I said this, I said, I'm selling into this because I need to raise some cash. And so I've decided to sell out of some stocks. I'm going to get into more, but I'm putting all of that in the newsletter. So let's go over some stocks now. 5 stocks to watch. This is Pfizer, Adobe, and Hertz. Ironically, I got out of Pfizer, I think yesterday or the day before, I forget which one, completely. They are down 6, 7, 8% because they put out guidance that was just bad. I mean, just bad. It was horrible. Again, it's a kind of COVID stock. And I said this, I've got the COVID hangover. I'm not 100% happy with the COVID hangover, but it's there. It's just a poorly run company. One thing that I wanted to point out was oil. Oil is down in the 60s. It got below 70. It's at 68.83 as of the last. I think it just ticked up to 70 in the pre-market. But it's down low. And that'll, when I go over some of my sales over the past week, you'll kind of understand that why I did it. But I'm selling into weakness. This was a crazy situation yesterday. This is Kava Group. Their IPO was back in June. And if we look at the chart in the 4-hour algorithm, you'll see they got a cross up yesterday at $38. I'm not taking it. It's not a stock that I'm watching. It's just too new. But yesterday what happened was that it was the expiration of the lockup. And what that means is people who were insiders who got granted shares prior to it being available could now sell. What happened was the stock was down here at about 32. It went crazy yesterday. And the reason it went crazy was because not too many people were selling. That's the only reason the market saw not too many people are selling. So what happened? Buyers started showing up. It's below its 200-day. They showed up. It went to its 200-day. I think it's going to pull back. No reason to get FOMO on that one at all. Stay out of that one. I'm not getting into IPOs. I don't like the IPOs. Yesterday on my Twitter, I posted I sold PXD and I got out of it. I removed PXD from the core portfolio, and I removed it in Savvy Trader. I removed it in TrendSpider. I removed it in my Seeking Alpha portfolio. The only reason I did that, and the reason I got out, is because PXD turns into Exxon. I had enough Exxon, so I decided, I don't think this one's going to pop back up to 240 because I don't think Exxon is going to go back to 120. So I made the determination I'm just out. And then I made the determination that I was getting out of Exxon. And part of that reason was this post from Brian Sullivan yesterday: oil to 60 or below 50 soon. Gas could go to the $2 in some part of the country. You can see it got to 68 yesterday. I'm kind of tired of Exxon going down, so I sold out of my position. The majority was long-term. You can see I sold into weakness here. Doesn't mean I can't get back in. I took enormous gains on Exxon. I will reevaluate this after 30 days, but I'm just sick of oil going down. I misplayed PXD. PXD I should have sold in the 230s. Exxon, I should have sold when it crossed this 109, and this was the time when I sold it last year. I absolutely should have sold it. I just played it wrong. I'm going to redeploy the capital that I took from Exxon and PXD and redeploy it into other things. But right now, I still hold Oxy and Devon. And both are same thing. They're just weak. Oxy is up 0.34. You're kind of seeing it put in a little bit of a button hook right there. Devon is, let's see, where's Devon? Devon is up 0.14. It's not even putting it in. It just keeps getting you in and getting you out with losses. So I'm kind of getting sick of these. Devon is in a retirement portfolio. Oxy is in my brokerage portfolio. So I'm much more likely to sell Oxy to be able to take that loss. Devon, I believe I'm slightly up, if not even on. So it's not like I'm making money on that one. I might be losing money. It's just a little bit of an annoyance to me right now, even though they have a big dividend. Yesterday, TrendSpider posted about the VIX. Today, the VIX is at its lowest level since January 2020. That's before COVID. Is it a buying opportunity around the corner? 70% win rate on average return of 14.34% in January over the last decade. Remember, the VIX is the volatility. So what do you want to play with VIX? You play UVIXY. It is a ProShares. It is a triple levered ETF on the VIX. If you want to see the VIX, we can go over here to, I'm going to go to Seeking Alpha, and we can just type in the VIX, VIX. And I've got to, there we go. And it's at 12. I mean, look at this chart. If we just go year to date, the VIX is at 12. If we go 1 year, look, it's just continued down. 5 year, look at that. I mean, it's just sitting there from 2019. So here is COVID, where you had it going crazy to 75. It's just come back to its normal level. Now, if we see some buying and selling and the VIX really goes nuts, you're going to see UVIXY go up, right? UVIXY right now, you lose 88% of your money. Remember, it's a decaying asset, so it's not something to invest in. It's not something to buy and say, oh, in January, it's going to go up. You want to buy on confirmation. You want to trade this one. You don't want to own this. The inverse of this is SVIXY. This is the short. So when the VIX goes down, SVIXY goes up. You can see right now, we're in the middle of a pretty good run on SVIXY. If we just look at this, that's 26% in 42 days. And you still have confirmation. So even though the VIX is down, I don't want you to buy UVIXY yet. I want you to wait until we have confirmation. But it's key that UVIXY, which is a triple levered ETF ProShares, it's at $8. Do not think that this can't go down to below $1. It will go below $1, and then just like back here in June, it will reverse split. This was a reverse split 1 for 10. It will reverse split. They will keep their listing. It will just reverse split, and then you have no chance of ever getting it back. Pfizer, I sold. Biggest mover today, Pfizer, Take Two, Coherent, and more. Pfizer just gave bad guidance. I sold out. I got lucky. I mean, honest to God, I just got lucky. Google, this is one place where my redeployed capital is going. I've said it before. This core portfolio, if you want to just invest in these, I don't think it determines, your time. These are really good stocks. Some of them are better than others. Google is one of those that I think is fantastic. I've said 130 was your buy point. Right here, you can see this white line. That's the VWAP right there. But I think 130 is still your line. I might just buy it at 134. I mean, again, if it's long-term, are you going to, when it's at 200, are you going to care that you bought it at 130 or 134? Probably not. And I would buy it for long-term. You can see the weekly here. We still have all-time highs way back here at, let's see, it was about 150. So right about that point right there. And we've still got room to go. So just to get to the all-time highs, that's it. There's not many stocks like this. Like Apple is almost at all-time highs. It's right there. Amazon still has some room to run on the weekly to get back to its all-time highs. This is one that just crossed the 200-day. So even in those great 8, you've got some really good names to get into if you're looking for the long term. Don't think that you're going to sit back and relax and just time this market. You can't. You'll see when we get to the scans, it's crazy how many stocks are still in a bullish run and get a second leg up. One thing that I want to bring up in the core portfolio, Tesla. These headlines are crazy. So Tesla recalls over 2 million vehicles to address autopilot issues. What this tells somebody who doesn't understand about Tesla is that Tesla has to bring these 2 million cars in. No. Tesla will deploy a software update overnight. This only affects full self-driving cars. It's because NHTSA wanted people to pay attention when they're on the autopilot stuff. That's it. So the headlines and the clickbait on Tesla is crazy. Crazy. It will take the stock down with some of this news. One thing that I want to point out is Tesla does not advertise. And when you're seeing a lot of these local news stations put Tesla into their feed with a headline like that, I question whether the local car dealerships are saying, hey, we want you to bash Tesla. We think that Tesla, they're taking away business from us. We can't service electric vehicles. We don't like electric vehicles. I mean, it's clear Ford liked them up until, the local dealers couldn't sell them. And I don't think it's because 100%. I don't think it's because of the consumer demand. I think it's because of the consumer education. And I think that the end dealer for Ford is just not educating the customer. They're feeding into their range anxiety. They're feeding into, these batteries need to be replaced and the Ford truck is going to last longer. It is what it is. But understand that is a scare headline. It's not something to be afraid of. Tesla does have a button hook. I would probably not buy it here. You've got a couple of gaps down to about 225 or so. I love the Cybertruck. In fact, part of the reason I'm selling a large portion of my portfolio is so that I can buy cash for a Cybertruck. That's what I'm looking at. Matthew from Spotify wants me to look at Kraft Heinz. Is it a good long-term investment? So I did a couple of things here. Kraft Heinz, I do hold this in my Webull account. And let me just Kraft Heinz, KHC. Why do I always put KHZ? Kraft Heinz, I do hold my Webull account. And part of the reason I hold it in my Webull account is because I was just betting on this Dow stock that kind of, had a nice little cross up. You got a golden cross here for the short term. I do like this stock. It's got confirmation right now. But your specific question, is it a good long-term hold? So I went in and I looked at some stuff on Seeking Alpha, and 5% yielding Kraft is a top-tier recovery stock. And he goes into a lot of description, a lot of stuff. This article is all about the robust case going forward for the stock. It's part of why I love Seeking Alpha. I mean, you don't have to listen to me. You can just go into Seeking Alpha and find this stuff. The takeaway is that KHC could be a rebound. The comment section alone was fantastic. So if you go down here, what I really like about these analysis things is that people who are significantly smarter than I am about these particular stocks. You guys know I'm a tech investor. I take part in a lot of these conversations in the comment section on Seeking Alpha, in the comments about tech. I do know about tech. I don't know about Kraft Heinz. But you can see, I mean, these guys know what they're talking about. And a lot of them are super bullish and super bearish on Kraft Heinz. If we go over to Kraft Heinz and we go KHC, and we just look in Seeking Alpha, you can see Seeking Alpha analyst buy at 3.57. That's not super high. Usually it's 4 for me to kind of, oh my God, they're really saying it. Wall Street buy. You can go down here and you can look at Seeking Alpha versus Wall Street. Here's what the bulls say. Despite macroeconomic headwinds, KHC is making improvements. Growth initiatives are paying off. Kraft Heinz exhibits robust price movement. Kraft Heinz turnaround. Current bears aren't saying anything. So it really doesn't have bears out there. You can do charts on these things. You can do all of this stuff. Now, what I want to point out to you is my look at the charts. And if we look at a weekly, and because you said you were looking at this for a long term, I really want to put this out as a weekly because I want to pull this out and show you why I bought it at $31. And again, this is in my Webull account. I just noticed this thing. What I like about Webull is when I find this stuff, I just go in there and buy it. And I look at it and I say, okay, I'm going to buy. And so I bought Kraft Heinz. I think I have 1 or 2 shares. It's not a huge buy. But again, I only have, what am I up to? $3,300. Let's see. Let's do a Webull check right now. I put $1,000 in there. If you go to my link tree, you can see there's a sign up for Webull. I put $1,000 in there. I'm at $33.56 right now. And Kraft Heinz, I have, 2 shares. So it's 2 shares. And I bought it about 31. And the reason I bought it 31 is this shaded area right here between $30 and $45. I will include this in the newsletter for you. I will include all the links for you in the newsletter if you want to see it. I don't like it long-term until it gets to a long-term trend. Until then, it seems to provide a solid trading range in this weekly chart. And you can see this goes all the way back to the pandemic, 2020. These guys it's a commodity. This is just, for me, I buy store brand. It's not my kind of stock. I buy store brand typically. It's got a 5% dividend. So even if you wanted to wait for it to get back to its all-time highs, it's got a 5% dividend. It's not enough. The 5% dividend is not enough to push me to long-term. I like that trading range. If it breaks 45, I'm out. If it gets back to 70, great. But I'm not kicking myself because I got out at 45 when I got in at 31. It's got to prove itself. And right now, I think that rebound is solid. I think it's good. I think buying it at 36, you're buying it closer to this middle ground. And I don't like to buy at the middle ground. If I identify a trading range, I like to buy in that bottom downtrend. So JDB from Spotify. Could you check Verizon out? Let's look at Verizon. Verizon, here's my problem with Verizon. I love Visible. Visible is my phone company, and they are owned by Verizon. The problem is Visible. If you want to sign up for Visible, you can go to Linktree, linktr.ee/daily stock pick, and down here is Visible. And you get $20 off your first months of service. They only have 2 plans. It's $25 and it's $35. The $35 is if you absolutely can't stand being throttled from time to time, maybe 1 or 2 times a year, pay $35. If you don't mind being throttled every now and then, it's $25. And it's not crazy times. I can usually find Wi-Fi when I'm doing that. The Verizon, I said down here, this was a solid stock buy at $31. It's got a big dividend. We'll look at that. But right now, the algorithm has you out with a 19% gain. There's no reason to get out. That MACD is falling. The RSI is down at 34. It could get down. You got this gap down here between 31 and 32. It's been a solid gain over the past month, but I wouldn't get back into this. If we look at some of the fundamentals, the problem is cell phone service and just communication services, it's expensive. They got to constantly update the system. You got a 7% dividend on this. 7% dividend. That's crazy. They're not going to be able to hold that up and continue to invest in the business. You've got an upgrade in October. Average target price, they went from 37 to 38. You're trading at 37. 52-week high is 42. That's way back here at the beginning of the year. I don't think that you're going to see a huge rebound in this. If we go to Verizon, we go to a weekly, you can trade this one because you want to trade on the rebound. But look at that. This goes from 2020 all the way down here. They're just spending money. And it's a race to the bottom. Understand, cell phone plans are just getting cheaper. So, Kevin Hayes, I'm eyeing 3 stocks to add to my portfolio. Long-term, curious what you think. DOCN, Melly, CELH. So let's look at DocN. What is DocN? DigitalOcean Holdings. I know nothing about it. I think you're fine. I think if you trade it at 26, you're great. I don't know that I do long-term on this one. DocN. I don't know anything about it. DigitalOcean's holding. They're losing money. It's up 28% year to date. Average target price is 31. You're trading at 32. And those are recent price targets. Morgan Stanley underweight. They went from 127 to 103. That seems kind of crazy to me, but I don't know about that one. Melly, this is a great company. This is part of the consumer. It's the Amazon of Latin America. They're making money. Their PE is extremely high. Just understand their PE is extremely high. You're trading at all-time highs. It's up 90% year to date. The average target price is $17.60. You're trading at $16.44. You're at your all-time highs. Again, Melly is just one. If you want to get into Melly, have at it. I'd rather be in Amazon, personally. I think Amazon's, let's see, Melly, PE is 83, forward PE is 43. Let's see what Amazon is. PE is 77, forward PE is 41. Amazon's just cheaper. Cheaper in a significantly better place in that Amazon has AI with the cloud services, and they have Prime. I think they're just in a better place than Melly. But I would take Amazon over Melly. Now, Celsius, CELH. This is a drink company, I believe. This has been a solid mover. You can see over the past kind of year, it's gone from a low of about 27 all the way up to 49. Right now, you're seeing weakness, and you're seeing the death cross right there. My guess is that's valuation. Let's see over here. Yeah, your PE is 101. Your forward PE is 52 for a drink company. Your average target price is 70. You're trading at 50 right now. You're kind of midway. You're 27% below your 52-week high. Let's see if anybody's buying it. No, everybody's selling it. Everybody's selling it at 50, and they're selling it at 52. So again, if you want to get into this, and I think he said he had a Celsius in hand. Yeah, he had a Celsius in his hand right now. So it's not my kind of stock, not my kind of thing. It's expensive. All of those are fairly expensive stocks. They're not something that I would necessarily get into in that I don't know the future of them. I think Celsius in particular might be a little bit of a risk because people's tastes change. So I don't know if Celsius has that. Melly and Doc N, you can do what you want. Melly, I think I'd take the thing. Bullish Bites on Instagram wants me to look at Intel. We went over this Intel. Intel at a cross up at $44.36. They have their AI event tomorrow, so I expect more bullishness on that. You can see the MACD's down there. I don't think this is a bad one. If we go in and look at the long term, you can see you're just back at the 200-day. The 200-day is going to provide you some resistance. That's it. You can see right here, if I even pull up on this, you can see it's bumping right up against that 200-day. Now, the 50-day is moving positive, so I would expect it, in the short term. I don't know if you're going to go back under 40, but I would expect it to absolutely put in some solid resistance there. But that's Intel. Now, the scans, there's too many scans to go over. We have Coke. Coke is finally pointing upwards. I think it's going to, I told you it was going to get back to 60. It's at 59.36. Hopefully you bought it under 60 because 59.37, it's going to get to 60. We have another cross up. This is going to go for another run. Pan W. This is Palo Alto Networks. This one, another cross up, should include another run. This one is a solid gain. I can't pull it down. There we go. You're seeing it up 0.41% today. So Pan W is one. VOO. If you're interested in the fact that VOO has another cross up, we're going for another run. This is clear and present. Just understand, this is 100%. You're in a bull rally and it's continuing up. The Santa Claus rally, you're setting it up for tomorrow where they don't raise rates and then we get another road up. SMCI. I bought more of this last week. SMCI. I think I bought it 264 or so. 265. It's just kind of floundering and the MACD's crossing up and crossing down and crossing up. Remember, my algorithm is a little bit touchy when it kind of trades in this range. So I bought it 265. I'm hoping that this is a long-term strategy. I think it's going to play out. Roblox. Roblox is up 3% today at 43. I said it before. Anything under 40 on Roblox is a solid buy long-term. Watch the charts right now. The algo has it at 54%. This was from a couple of days ago. So you're still going up. Netflix. Netflix has a cross up again. They just posted their most watched shows. 463 Is it crazy to buy at 463? No. It's expensive, yes. This is the best of the best streamers. You can see back here, this was a $700 stock. If we go over to Netflix and we look at the valuation, it's got a 46 PE, 29 forward PE. They are still getting additional revenue from their crackdown. So that double top right there is about 481. I would expect that to be resistance. You're about 4% from that. I am going to buy more of this. I solidly believe in this. Etsy got a cross up. SPXL, FAS, UPRO, Berkshire, BRK.B. Now, I don't know if it pulled back here because of Charlie's death, but you've got an opportunity to buy back in. Long term, this is not one that you trade. My algorithm makes you 13%, but buying and holding makes you 22%. This is just one that you buy. What you use my algorithm for is an entry point in there. And you can see 361 right now. I think that that's going to provide some resistance right there. That's all-time highs. I think that's exactly where you're going. And once you break out above that, hey, you're off to the races to all-time highs there. XLF, XLG, one that I really like is XLG. This is the top 50 of the S&P. XLG, there we go. I like this one. You were in at 33. You're at 37 right now. This is a solid one that you just want to add when you get into these positions. It got another cross up. The RSI is a little high. I don't think that that's a horrible position to be in. If we just look at a weekly of this one, you're getting all-time highs. Yes, it's scary to buy, but you buy 10% of the position that you want right now. And then you dollar cost your average way in over the next, 2-3 weeks, whatever. Figure out a plan. XLF though, XLV, AIQ, Visa, Intel, IBM, Honeywell, JP Morgan, ISRG. This one is an AI play. Intuitive Surgical, ISRG. This one, everybody that I see in growth portfolios says that this one's a solid one. I don't own it. I don't know anything about it. It is expensive, but it's got another cross up on here. And Intuitive Circle, you can see the PE 75, the forward PE is 50. They're making money though. They're up 21% year to date. So it's not a crazy one that's up there. It's 52-week high is 358. You're trading at 322. And the target price is 326. But that's all from like April. November 318 was HSBC. Let's see, is there any insider stuff going on? Mostly sells at 173. At 300, 290. So, but yeah, Intuitive Surgical is one that I watch. There's a bunch of low-cost ETFs, including VIG, RSP, VOO, VYM, SPY has a cross-up. But with that amount of cross-ups, it is clear as day that we are taking off. This could be the Santa Claus rally. If the pause comes in tomorrow and if Powell even mentions potential rate cuts, look at those Bollinger Bands. They coiled up and then they expanded, and they're expanding on the way up. So it is what it is. Again, go over to the link tree, sign up for any other services that I have. TrendSpider right there. Get it as a Christmas present. Get Seeking Alpha as a Christmas present. Put it on your Christmas list. I'm telling you, the two tools that I have that I'm really using to rebalance my portfolio and make and beat SPY in the S&P next year is TrendSpider and Seeking Alpha. Webull, that's my sports betting app. I replaced my sports betting with actually just going on the Webull app and buying stocks. It's turned out really well. Use that link. I have gone from $1,000 to $3,354. So solid year for me. The newsletter is right here. If you're not subscribed to the newsletter, I have no idea why you're not. Honestly, it's a free newsletter for the week. If you want to pay, you get the weekend newsletter. If you have TrendSpider, part of my paid is my TrendSpider setup, which is right there. It's one of the most popular ones. It's got all of the screenshots that I use with all of the indicators, all of the moving averages and details, and why. I mean, that's the key is why. I say don't follow me into trades, but if you want to learn about how I trade, the paid newsletter is what you should subscribe to, because I do a lot more personal stuff about, oh my God, I sold this one. I'll go into all of my details this weekend about all of the stocks I sold and why I sold them on the paid newsletter. If you're buying a Tesla, I mean, don't worry about that recall thing. It's crazy. Those of us that have Tesla, not a problem. AT&T fiber at your home. If you're looking for internet service at your home, use that link. You get a billing credit. I get a billing credit. It's kind of nice. Empower is the one. Mint is going away, I think in March. They're trading, going over to their other Intuitive's other app. So I'm using Empower. I'm starting to transition now. Again, it's that time of year. So if you've been listening to me all year and you've beaten the S&P or you've made money, just gift me. I mean, again, be kind. I do all this stuff for free. I don't make a very good living at this. I live off my trades. I live off my portfolio, off of my money. I do have a supplemental job that, again, you wouldn't be able to live on through MLS, through a contract job. At some point in time, I may put out my income so that you guys can see. The tips help. Let's just say that. So tip me. If you want to email me, my email's right here. The tip, I prefer Venmo or Cash App because PayPal, for some reason, charges me money. Spotify's up here. Everything's up here. So I will talk to you guys tomorrow. Have fun. Take care. Bye. Stop recording. Okay, now I can read your comments. Good morning, Mark. Scott, percentage of your portfolio Bitcoin. I like the guidance that I've heard, which is minimum, if you're going to invest in crypto, 5% of your portfolio should be targeted towards crypto. Meaning that, if you're trading Mara, that should be included. If you're just going on Coinbase or somewhere else and buying Bitcoin, I do warn you, even with Coinbase, they say your crypto, your keys, and that's been kind of, I've got a neighbor who actually trades crypto, and he was in an airport. They targeted with a device his phone SIM card. He was on an airplane, got off the airplane, got a bunch of texts that his account was being entered into, and they were moving his crypto. The problem is, at that point, they couldn't get a lot of his crypto back. They took 7 figures from him. Not all of it, because he did have some in cold storage. That's why I don't like some of the Bitcoin storage on Coinbase and stuff like that. They do say your crypto, your key. So if you're going to invest in crypto, that's where I would say. But 5% is probably the conservative point. If you want to be a little bit more aggressive, I'd say 10%. I kind of point to Bitcoin and Ethereum should be the only things that you actually buy. Solana may be one that you want to buy. I think that's the third one that's kind of coming up. Morning, Zephin. Yeah. The Widowmaker. Yeah. I agree with Christian. I think the spot Bitcoin, I think what you're going to see, and Christian's probably right, just the timing of it might be a little bit different in my mind. I think when the spot ETF comes about and gets approved, I think you're going to see a bunch of everything rise. I think 10, 20% isn't crazy to think that it's going to rise that much. But I think you quickly see people taking profits, and that's where it comes back. Yeah, Buffett. If Buffett's in a name at 80 and you can get it at 30, again, Kraft Heinz was just one that, I think I noticed it on this podcast with a scan of the Dow or what, the S&P 500. And I said, this just seems a little low. And I looked at the weekly chart and I said, if I can buy this close to where we came out of the pandemic in May, June, why not? So I bought it at 31. US Steel is probably going, I would say it's going to. I sold out of Cleveland Cliffs, and I'm a little upset that I sold out of it because I do think they get US Steel. I just think that you're going to see them pull back on that deal. And that's part of why it was either a profit or a small loss. Either way, it was very small because the majority of my buy was at 19. I did dollar cost average my way up though. But US Steel, yeah, that deal is about to get done. More than one bell ringer. Yeah, I think Zephin, I pointed out at XLG, I think about a year ago on this podcast. You're an OG. I've been following it for a while. In fact, the second I messaged my dad, I think it was in the October timeframe, and it may have been December. I said, Dad, it's the top 50. I said, it makes sense if we're going to have a recovery that the top 50 are going to guide us up there because they're down so much. And he bought into it, I think, here at 26 or so. I mean, he put a bunch of money. I mean, he just sometimes my dad takes my advice in large chunks, and sometimes he just ignores my advice. There's no in between. I think that's a good one, though. Yeah, Solana is a good one. No, I don't like XLE. The problem with XLE, and Zevin, you may miss the first part, I'm just getting less bullish on energy. And the reason I'm less bullish on energy, look, I mean, what makes me think that energy should be higher than it was back here in 2018? Where's the gap on XLG? Yeah, there's gaps below. This was probably like a Microsoft or an Apple announcement or something like that. But you got gaps all over the place on this. I think if you're investing in long term, I think you're okay. You're probably buying at a little bit of an extended time. But when was a bad time to invest in this? XLF. XLF is the financials. I don't like XLF has a rebound, but it's come pretty violently. I mean, look at that. That over 42 days, you're up 12% in a freaking spider sector. Long term, XLF I think is just kind of catching up. I think XLF, you probably hit a resistance level at about 37 with this top that was back here in June. I think you hit that top, but you can clearly see, I mean, just since June 2022, when you were there, I mean, you're in the upper edge of this range. So I don't think that you're gonna, if you pass 37, I think you're off to probably 42. Oh, XLY, consumer discretionary. I like XLG more than XLY. For long term, I like XLG. Specifically, I semi know your portfolio. I'd take XLG over XLY. Here, let's look. Let's do this. XLG will chart against XLY. Select metrics. Performance. I like total return, not just price return. And will XLG, XLY. And we'll add XLK. Because XLK is going to blow them all away, I think, over long term. Yeah. 5 year. Look. XLG 108, XLY 75, XLK 202. Now, mind you, the reason here, if we go down a 3 year, we should probably go 1 year. Remember, it was 2021, I believe, that Tesla got added to the XLY. And because the market cap was so big, that's what shot it up as a big position in there. So when you go back to 10 years and you look at XLY up 197%, XLK up 521, XLG up 240, the reason XLY hasn't taken off as much is because it's only had Tesla a couple of years. And so if Tesla was included since its inception in 2014, this would probably be up with XLK. So, but if you want to know the sectors that I like, I mean, XLK is my top one. I think I own, let me see. I do not own XLG. Full disclosure, I do not. My dad owns it in a rather large position for him. But let's see. Ooh, wow. I'm up 1%. What the hell am I up 1% for? Hold on. All positions. It's got to be Apple. Yep. Apple's up almost 1%. What's dragging me up? Oh, Palo Alto's up 1%. Square's down 2%. So I own, let's see, current value. XLK, I own well into the six figures. XLY, I own just in the six figures. So I do own significantly more XLK than I do XLY. In my brokerage portfolio, though, I mean, that's adding up all portfolios. In my brokerage portfolio, though, let's go back to individual, and then we'll go to, how do I see this? Details. There we go. In just my brokerage portfolio, this is just my trading and living on portfolio, I own $90,000 worth of XLY, and I own $80,000 of XLK. So XLY, since I mean, a dollar cost average, so the total gain is 300%. The total gain on XLK is 400%. So, yeah. Yeah, and I went over this a couple of days ago. The reason here is this is why XLK is up so much, and this is why I like it. Look, the top two holdings, 23% Microsoft, 22% Apple. And then you got Broadcom. The next one is 4%. So XLK, you're buying into both Apple and Microsoft. And it makes sense. And the expenses are super low at 0.1%. It's a solid one. The problem that you have is it's run up so much. I mean, if you go over here and you look at XLK, it's just run up a lot. But I in my mind, I think it's worth it. If you look at weekly, you're at all-time highs. But when was a bad time to get in here? I mean, honestly, when was a bad time to get in here? There wasn't. So they're 0.1. They're not horrible. But if you want a Vanguard, let's see. There's a Vanguard. Vanguard Tech. VGT, I think, is the one. Yeah. This doesn't hold as much Microsoft. But it's the expense ratio is 0.1. They're all 0.1. I mean, they're super low. VGT versus XLK. And you'll see XLK actually performs better. It's not, hugely. It gets bigger as you go out a little bit, but 10-year. I mean, this is why I use XLK instead of VGT. I think the spider sector, if I remember correctly, and the reason I don't own a lot, I own more spider sectors than I do Vanguard stuff is because spider sectors change their positions more often. Let me see if I can find that. Spider versus Vanguard. Yeah, there we go. You can read this here. This is the difference between, and they're all kind of 0.1. So I don't think that from an expense ratio, there's a bad one to pick. It's just about which ones. Yeah. You're right. I mean, oh, come on. XLG. It's the crazy part about XLG versus XL. I mean, let's see, peers. Here's a one with a 0.02. Wow. 0.02 expense. Let's see their holdings. This is 500. Yeah, that's just the S&P 500, SPLG. 0.02. What's SPY has to be a. I guess not. 0.2 is not killing him on fees. I mean, you know, you look at something like ARKK and you look at their fees, they're at 0.75. So, I don't think that, you know, 0.2 is killing them on fees. I mean, here's the thing that you have to remember, Zephan. You're paying 0.2% of your money for them to invest equally into the top 50 stocks versus if you just invested in those top 50 stocks, you're not paying a fee. With fractional shares, you can buy fractional shares. You can take, you know, $50 and buy $1 of each one, or you can break it up. XLG does it by percentages. You're paying them to actually manage that whole portfolio as a percentage thing. I don't think it's a crazy fee to pay for that particular one, because I do think the large cap, you know, you're hearing this is part of what I hear on CNBC is everybody's talking about small caps and the IWM and they have to catch up and blah, blah, blah. I think that's a lot of shit. I think those people are talking their book. I think that we don't need the bottom half to come back up. I do think that at some point in time, the bottom 497 stocks outperform the top 3 at some point in time. They do. But that's an awful big lift with the size of the top 5, 7 stocks, 493 versus 7. So, okay, I'm going to get out of here. If you have any questions, Zephan, you can email me on this stuff too. Or just message me on Instagram, however you want. Okay.